Thank you for staying with us. There was talk of the Colombo bourse finally running out of steam, given the rather drab performance recorded in May and most of June. Was this a mere temporary blip in what is still a market with bullish undertones? And what are the BOI's FDI expectations this year? Is the billion-dollar target realistic? Benchmark's Anushan Selvaraja went in search of answers.
Welcome to this week's edition of The Voice of Business. I have with me economist and LMD columnist Hasita Premaratna. Now, Hasita, is the bourse finally running out of steam, do you think, or is the rather drab performance in May and most of June just a temporary blip in what is still a bullish market with bullish undertones?
Yeah, I think the last 2 months drop in the indices were primarily due to the lack of liquidity in the secondary market, because over the last 2 to 3 months, we've seen about approximately 40 to 45 billion rupees worth of funds getting mopped up into the companies. Like we found about 30 billion going into rights issues, about 10 billion rupees going into IPOs, and another about approximately 5 billion rupees going into pre-IPO sell downs or private placements. So essentially this kind of money going out of the market means that the trading activity in the market naturally gets kind of curtailed. And this is something would put the indices under a lot of pressure. That's exactly what has happened. And another reason is that if you look at a year back, most of the government institutions were coming out pretty strong and getting into a buying mode moment the bourse turned negative. But this time around, I think government institutions have been less active, and maybe their funds are fully invested, or maybe they need to have fresh allocations for funds for investment, because at the end of the day, that support used to sustain the bourse at times when there were significant drops. But right now, that's not been seen. So as a result, the fall in the market came almost 700 points, 600 points down over the last couple of months, and yet to be seen further support.
Now, corporate earnings continue to project some serious turnarounds, but how much of this is distorted by the relatively low bases of last year? Can this momentum be sustained next year?
Yeah, I think if you look at the 31st December 2010 or 31st March 2011 profitability, we see the growth percentages coming in 3 digits, basically saying 100%, 150% type of growth. But having said that, those growth came from, on one side, the low base, and on the other side, there were significant kind of momentum changes, shifts that happened towards that. Now, whether this growth will continue in the next 2 to 3 years, well, not at the same pace, definitely, because obviously the base is higher, but also maybe we can expect the corporate earnings to support the growth in the range of about 15 to 20%. On a more positive side, it might even extend up to about 25% range, but on average, I think it has to stay in the range of about 20% in the future, given that they're coming from a relatively higher base compared to last year. Also, we see selected tech sectors still continuing to grow at a rapid pace, and a few turnaround stories, some of the loss-making companies turning to profits, which will also have a positive impact towards the overall corporate earnings situation that's going to come up in the next couple of years.
Now, as you note in your column in LMD's forthcoming edition, the BOI expects $1 billion in FDI this year, which is around about 2% of the country's GDP. In your view, what are the chances of this target being met?
There are certain FDIs which are coming towards larger infrastructure development, particularly on the road fronts, and maybe also on the port development related work to be completed. So these FDIs will come in a regular manner. But I think we should be able to get close to somewhere around 70 to 80% of the target during this year at least, and look for more. But the point is that even the 1 billion target itself is too small in the context of the type of investment that is required in the country at this point of time. So the foreign investments have to be more. There's no doubt about it. So even $1 billion, I would say, is something that we have to drive maybe in multiples in the next 2 3 years for us to see the substantial growth. But having said that, I think the local markets, particularly the capital markets, have been active in the last few months and raising funds for various expansion activities, at least of the private sector, which is a good sign.
Now, Hasita, going forward, where do you expect the market to head in the next 3 months and then on to the medium term?
I think we have seen a sizable correction in the market in the last few months, which was something that is that was on the cards if you look at the beginning of the year. But market will stay a little subdued in the next couple of months, given that there are more IPOs that are coming in and mopping up the liquidity. Also, there will be more rights issues from what we understand. So essentially, the liquidity will be one of the key things that we have to watch in the context of the next 2 to 3 months performance of the BOS. Having said that, in the medium to long term, the corporate earnings should continue to give that momentum and the pickup. And essentially what that means is that we are looking at maybe 6 to 8 months time frame, which probably towards November, December time frame, where we can really see the market steaming up again. Also, the early part of next year would be important, because that's where some of the other corporate earnings that were relating to this year would come out, and these corporate earnings should definitely have a direct link towards the market's movement. So it's important to understand that the liquidity issue in the short term is gonna have an impact. But having said that, that can create that opportunity for a medium to long term investor to pick up fundamentally sound stocks at very attractive price levels, or at least reasonably attractive price levels, given the current scheme of things in the market.
That was LMD columnist Hasitha Premaratne speaking to Benchmark's Anushan Selvaraja. Thank you for your company. We'll see you again next week at the same time.